This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks with Alan Green. How was that pint, Alan, from last weekend? Was it as delicious as the picture looked that you sent me?
It was absolutely fantastic, Mark. Hello again, and yes, it was every bit as good as I'd hoped it would be. We're very lucky to have these great artisan brewers around here in the south of England, and the Longman Brewery. They're based in Littleton, and that's literally the closest pub to it, the Plough and Harrow. So of course it comes straight out of the brewery into the pub, and it's renowned. But also the food there is very good too. So it was lovely to go there, sit outside, even though it was cold, have a meal, and just enjoy that pint. It was perfect. Yeah.
Good. And I managed to do the same thing. I did it on Wednesday, though, the very first day that the terraces were allowed to open. But it wasn't like I went down to the pub. I'm very lucky. There is a chap just on the ground floor of the apartment where I live who runs a little kind of burger restaurant-y type place, and he's doing alcohol. And his terrace opened, and he said, "Do you want a beer with me?" So I said, "Yeah, I probably shouldn't do, but yeah, go on then." So I had a mid-afternoon beer. And just enjoyed. It was actually quite sunny, so yeah, it's nice to be back out enjoying those kind of things, and hopefully only gets better.
Yeah, well, I think as lockdown lifts, and also of course there's the weather too. I mean, I'm sitting here, we've got another beautiful day, but I think there's rain due later on today. But what was forecast earlier in the week hasn't so far materialised, apart from rain on, I think it was Wednesday. So that's it. And if we can have a nice bank holiday weekend and get out and maybe do it again, that would be perfect.
Yes, of course, it is a bank holiday weekend, isn't it? Again, yes. So
it is, yeah. 3 days of leisure coming up. So
3 days of leisure coming up. Yeah. And I wonder what the markets will do. It seems like the sell in May and stay away saying has come a little bit early this year.
It does seem to be that way, doesn't it? Yeah, I think we've had the initial push at the start of the year, and of course the leisure stocks, the leisure and travel stocks, have recovered strongly on the basis of expectations from people's activities after lockdown. So of course they've factored what they think will happen in. Now it's a case of wait and see, and it's often the way. I think you see a big push in quarter one, and then you get the pullback and the go away in May factor comes in, so the markets can catch up with events, or events can catch up with the markets, and clearly it's very much a work in progress as we come out of lockdown.
Yeah, absolutely. But I always find that this time of year although it can get a little bit boring on the stock market, of course, the weather's nice, so you can enjoy that. But it's also the time, I think, to be, just doing some research and picking out what you think is a good potential. You've got a bit more time, I think, to consider things and research things before you make a decision. And today, hopefully, you're going to enlighten us on a couple. I know we've talked about one in particular before. It's power metal resources. But, of course, things are always developing there. And there's been some news recently, more acquisitions in Australia and talks of spin-off companies. So there's some more to catch up on there. And the other one that we haven't spoken about before is Union Jack Oil, but a lot of people know about it. Did you want to kick us off with Union Jack?
Certainly, yes, indeed, Mark. So Union Jack Oil, Epico UJO, is currently trading at 37p. Gives it a market cap of around 35 million. Shares are traded as high as 64p on the year and as low as 18 pence. So it's run by the mercurial David Bramhill, who's the exec chairman of the company, very well known and respected throughout the industry, and is very popular with the retail investor too. He's an inspirational fellow. I've met him on many occasions, and he just brings a wealth of experience, but also a rare asset, I think, which is just eternal enthusiasm, and he just loves what he does, and that enthusiasm spills across, and he's got a very loyal following of retail and institutional investors, and as you'll find out, it's with good reason. So Union Jack they're an onshore oil and gas exploration, drilling and development company, and they're also an investor into various assets, as you'll see going forward. So their model has worked very well from over the years. They're focused in the East Midlands. That's Lincolnshire, the Humber Basin, and East Yorkshire. And I'm going to run through a series of projects that they have, and also some of the developments this year. Just to say as well, they've just launched an excellent new website, Union Jack Oil. So if you Google that, you can go and find the website. It'll basically tell you everything you need to know about each of the licenses I'm just about to go through.
Okay.
So firstly, up in East Yorkshire, we have the West Newton asset, and this has really captured investor imagination this year. So there's a reservoir, an oil reservoir in that region called Kirkham Abbey, and this is a new oil leg that's been discovered in that area, estimated to be some 2.5 kilometers wide, but the north to south size is still to be determined, but it's a big asset. Currently, the company reckons on a base case there's some 146 million barrels of oil with 211 billion cubic feet of gas. That's the base case. The potential upside case is as high as 283 million barrels of oil with 265 billion cubic feet of gas. So this is a huge asset. But of course, being onshore, unlike drilling offshore, when you drill onshore, there are so many aspects to safety, development of the well, ensuring that none of the fluids that are produced from the well are spilt or spoil the area or spoil the infrastructure and, of course, the environment. So it's a very exhaustive and detailed process, and indeed West Newton has undergone an online consultation program in the first quarter of the year, and the wells there have been developed to a point where the testing has been successful, and we're expecting to see a full testing program take place on the 2 key wells there in May. So we'll get some more news on that in May. Now, Union Jack's model is that it buys in as an investor, so it owns 16.6% of the West Newton asset. The operator Rebold Resources owns 16.6% as well. Rebold is of course also listed on name, and private company Rathlin Energy owns 66%. So that's the structure currently. So West Newton is progressing rapidly, and we will have more news on that in May. We then come to Lincolnshire, the West Humber Basin, and the Wrestle asset, and there is already free-flowing oil at this asset. Raw oil has been taken from the Wrestle well as it comes out, and it's been taken by road to the Phillips Humber refinery and sold there. Included in this is the Broughton North prospect, and when it's fully on stream, it is expected that Wrestle will be producing 500 barrels of oil per day. Again, here we have a split structure. Union Jack owns 40% of Wrestle. Operator Egdon Resources owns 30%, and Europa Oil and Gas also own the other 30% too. So that's the Wrestle asset. Moving to East Lincolnshire, we have the Biscathorp Asset, which is it's a huge asset, which has 2 key geological anomalies that are holding the oil, and the donation prospect, there's estimated to be some 24.5 million barrels of oil on the base case. The Westphalian asset, just under 4 million barrels of oil on the base case. The upside for donation is 36 million barrels of oil, and 6.6 million barrels of oil with the Westphalian asset. Again, the split here is operator Egdon Resources 36%, Union Jack owns 45%, and Montrose Oil and Gas owns 19%. I'm going to basically total these assets at the end. So because with the percentage split, obviously it's we need to have a picture of just what it is that Union Jack owns, and I've actually totaled that up at the end. So I'm just going through each of the prospects first of all. We then come to another asset in East Lincolnshire, the Keddington asset. This is already producing 25 barrels of oil per day, and there is an estimated 567,000 further barrels of oil there, and Union Jack owns 55%, Egdon Resources, the operator, owns 45%. So that's a 311,000 net to Union Jack Oil at the Keddington asset. We then have the Fiskarton asset, which is on the Fiskarton airfield in Lincolnshire. Steady production there, and the production is sold to the Immingham refinery. Egdon owns 80% of that asset. Union Jack just has a 20% stake there. The North Kelsey asset, Humber and in North Lincolnshire, it's 15 kilometres northeast of the Wrestle asset. This was drilled. This has been drilled this year. An estimated base case of 4.4 million barrels of oil, as the upside case 8.5 million barrels of oil, and drilling will be underway there throughout the year. Egdon again own 80% of that, Egdon Resources, and Union Jack own 20%. There are a series of other dormant assets which I'll just run through. There's the Dukeswood asset, which is the decommissioned Dukes Wood oil field in the East Midlands province. There's another asset in the Humber Basin, the Kirklington asset, the Lawton asset, and the Woodmapool Gulf asset. These are all dormant assets which could at some stage be reactivated. So in summary, what that gives Union Jack Oil is, and I've just gone on the base case here because I think it's important when you're looking to value a company. You have a base case of 38 million barrels of oil and 35 billion cubic feet of gas, which is, if you do the numbers, you'll see what that adds up to, which to my mind puts Union Jack on a very, very conservative valuation. I mean, the share price has already touched 64p this year, and I think that's giving it a valuation of about 60 to 70 million sterling, and I think that's probably where it should be. But I think investors are probably waiting to see how West Newton develops and how the process rolls along there. Just another word on the board. David Bramhill, of course, formerly Nighthawk Energy, Shell, Exxon, Petrofina, BP. Graham Bull, the non-exec director, is the geologist. He's got 48 years experience, formerly with Premier Oil, Sovereign Oil and Gas, Encore Oil, and in his earlier in his career, he was with Chevron. And the other non-exec director on the board is Joseph O'Farrell, formerly with Oil Quest and with Nighthawk. So there's a huge amount of experience with the board, but particularly between David Bramhill and Graham Bull. Very strong following, as I've said, with Union Jack Oil and Gas. Lots of drilling in prospect this year, and potential to bring West Newton on stream in the future, of course. And with the oil price where it is now, and certainly where it's going to be for the next little while, I think the company offers great value. The other element to the offering, which is a recent development, and I think is also it provides another dimension to the future valuation, and also underscores the cash flow position. Earlier on, the company announced that it had purchased royalty assets, and these are the royalty assets in the North Sea. So it's the only offshore asset owned by Union Jack, and these are the Claymore, Piper, and Scupper assets, where royalties are paid for from 20% of the gross production. Union Jack owns 2.5%. It purchased those from Cambridge Petroleum earlier this year, which gives an internal rate of return of 129%. And David Bramhill estimated that the payback on this asset will be less than 12 months. Gives the company steady cash flow ongoing, and more of these royalty purchases are planned. So Union Jack is diversifying its model. Its core model, obviously, is the onshore oil and gas assets it's owning and developing and investing into. But now with the revenue streams from the royalty assets, I think there's a new dimension to the company, both in terms of cash flow and also underscoring the future valuation. So yeah, a very exciting year in prospect.
Okay, so UK onshore oil, that's not something you generally consider the UK to have, or I don't anyway. Are these projects that are new, or they're existing? And is it? Do you know what sort of model UGO are following. You say it's like 16%. It seems like a regular thing they do. Is that kind of the model that they tend to follow?
That's the model that they tend to follow. Yes, so they're investing in, and you can see these companies are working as a team in this regard. So the operator, in most of the assets, the operator is Egdon Resources, and Egdon go in. They have the team to operate, and they have the infrastructure and the financial structure to go in and operate these assets. Union Jack comes in more as an investor, and I think you can see also with the purchase of the royalty assets, that's very much the thinking behind the development of these assets. But there's also been a lot of speculation that Union Jack are going to sell these assets on as they're developed, and of course, when you're an investor, that's sometimes what can happen. Of course, we've spoken recently about investing companies such as Trident Royalty Resources. You buy an asset, you hold it for a period of time while it develops, and it then gets sold on. There's been no such indication of such action from the board, but of course that's always a possibility when you take this sort of approach to investing in these sort of assets.
Mm-hmm. But they are existing oil fields, are they, Alan? Do you know?
Yes, they are.
They are.
Yes, very much so. I mean, the East Midlands, that region. If you go onto the if you go to the website, look under operations, you'll see the map of the northeast and the Humber Basin and where each asset is sited. It's a very good website, and it's you can get a very clear picture of just what the developments are from each of those. I also didn't mention North Kelsey. That's northeast. No, I did mention North Kelsey. I'm looking at the wrong sheet of paper here. That's the asset that's northeast east of Wrestle.
Okay.
So that's it's a very it's a broad spread of assets, producing assets and assets coming into production, and then of course you've got the royalty assets. And I think looking at the way the company is developing, it's as an investor, it's looking to buy more of these assets going forward. So that'll bring a steady cash flow into the company to enable it to make further investments into the likes of West Newton and Wrestle.
Okay, good. Is there any kind of friction that you know about in terms of like local objections to these wells, or is it sort of handled quite well?
There was certainly some friction with the Wrestle asset, and there was a lot of toing and froing with the Lincolnshire Council, but that has now been resolved. But of course, that is always an issue with onshore oil and gas production, and that's why I mentioned how. I mentioned the exhaustive process the companies have to go through to bring these assets online. It's safety first, protect the environment all the way. So if you look at the way the wells are developed, the area around the well is completely sealed. So that if there are spillages, if the worst happens, then it goes on to an area which is prepared for it. It's prepared to collect that oil, and of course, it means it can't run off into the fields surrounding it or into the areas surrounding it, or even worse, get into the water supply. So that simply can't happen. And when you've got a team when you've got David Bramble and someone like Graham Bull on the team, that's those are the facts that they take a great deal of time to check and look at the program, look at the plan program. And as I mentioned, of course, with West Newton, you have the online consultation, which is an online demonstration of exactly how the asset will be developed, how it will come into production, and all the steps it will take to protect the environment and protect the people that live in the area.
Yeah. I mean, that's always a consideration, isn't it? Particularly in Western countries, probably particularly in the UK, with it being relatively dense, you're always going to get objections. But at the same token, of course, the standards are much higher because they have to be to be able to get things passed, to get people to agree to it. So, yeah, I think that's a good summation there of the company. So, do you want to move on to Power Metal Resources?
Certainly, yep. Power Metal Resources. So, of course, we have spoken at length about power in the past, and with good reason. It is, I think, a substantially undervalued mining and exploration investment company, and I will explain why. So Power Metal shares currently trading 2.4p, giving it a market capitalization of 26 million. Shares are traded as high as 3.4p on the year and as low as low as 0.26p. So investors getting in at the outset have enjoyed spectacular returns already. It's already been a multi-bagger, but in my opinion, we are still very much at the foot of the mountain in terms of what this company is set to deliver. So it's a mining investment group and has a series of assets. I'm going to go through each one briefly, and then I'm going to go into more detail on the latest assets. So in Australia, there's a joint venture in the Victoria Goldfields, which we discussed on many occasions here. A hugely potent region for gold production. You've got the Fosterville gold mine, the Ballarat gold mine, and many companies working in the area, including ECR Minerals and Power Metal and other companies. So some of the Australian majors as well. So there are. Here we have a series of licenses granted in and around the Ballarat region, and there was an announcement earlier this week where 2 new licenses have been awarded, and one in particular, the Evergreen Tenement, covered a series of old abandoned mine workings in the region. So a very exciting asset to bring into the fold. Of course, this is a joint venture with Red Rock Resources. It's 49% Power Metal, 51% Red Rock Resources. And there are plans, as Paul Johnson, the CEO, has said, to spin that company off into a separate asset, a separate company on the Canadian exchange later this year. And work is already underway in that regard. So we then travel. I'm going to come back to Australia with the latest acquisition too, but I'm going to go to now to Botswana, where there are a number of projects underway. One of the assets that Power Metal is directly involved in is the Malopo Farms complex project, and this is a huge nickel asset that's been compared to the Voisey Bay nickel asset in Canada in terms of its potential size. And of course, as Paul will frequently tell you in interviews, that they are seeking massive sulfide mineralization. And with the drilling that's been undertaken at the Malopo project, the assay results have come back with very encouraging grades of nickel or pentlandite, which is the indication of nickel sulfides being present, and the size of the assets is very encouraging too. So further work is underway there, and it's a very encouraging picture emerging. But there's more news on that in due course. Also in Botswana, there are 2 further projects. There's the Kalahari Copperbelt project, which is southwest of the Sandfire Resources T3 and A4 dome copper and silver discoveries. Of course, there was a very successful discovery with Metal Tiger and Sandfire a few years back in that region. So this is a 50% owned project with Kavanga Resources. The South Ganzi Copper Belt and has huge potential soil exploration, and targets have been identified in that region, and we will expect to see progress on that in the coming months. There is also the 50.1% or 51% ownership of the Botswana of the Ditau Cam project, which is prospective for rare earth metals. These were discovered as far back as the 70s, and these magnetic rings, which are indicative of rare earth metals, were discovered there. So a company has been set up by Power Metal Resources and Kavanga Resources to roll these assets into that company, and that company they're seeking a listing on the London market at some point this year. So that takes us through Botswana. We then come to Canada. Most recently in Canada, Power Metal acquired a number of projects. The McKellar Enable Magical and Cocoa East project on the Hemlo-Schreiber Greenstone Belt. And of course, this is an area that's hugely prospective. You've got the Barrick Hemlo gold mine in this region. It's on the coast, the northern coast of Lake Superior. And there are many active gold mines, pure gold mining nearby as well. And of course, these assets were purchased by Paul and the team recently, and we're expecting to hear more news on the sampling and analysis work as we go forward this year. Now, we also have in Canada the Silver Peak project, and this is in the former British Columbia. The Eureka silver mine is Power Metal owns 30% of this asset, and there are the work that's been done there already reveals very encouraging. In fact, they're referred to as bonanza grades of silver at the mine, and there are plans to spin off the Silver Peak project as a separate listed entity going forward. So you can see that already we've got these three assets that are planned to be spun off, and I'm sure, given the success of this model, more will follow. So moving on from there, we then go back to Africa in Tanzania, where there's a joint venture between Katoro Gold and Power Metal. A 35% stake Power Metal have 65% Katoro Gold. The Haneti nickel and copper project. Drilling work is currently underway there, and we're expecting grades back soon. And again, that's an extremely exciting development. It's a huge area again, probably comparable with some of the huge nickel assets currently in production in the world today. So we then go back to the USA. We have the Alamo Gold Project, which is the right to earn up to 75% of a package of mining claims covering just under 1,000 acres. Now, gold nuggets have been discovered almost at and near the surface there. So a follow-on program is underway there, or will be underway. But we then come back to Australia. Of course, most recently we have the option to, or the completion of an option to set up a special purpose vehicle, which Power Metal will own 75% of, to buy a company that owns FDR Australia, that owns a portfolio of copper and gold assets in the Paterson province. And of course, Paterson is very well known by investors. It's a spectacular area for commodities, mining and mining production. You've got the Telfer mine there, and discoveries most recently include the Winu project, the Winu Copper and Gold project, which is 100% owned by Rio Tinto, and of course the Greatland Gold Havieron prospect, which there's currently been some very encouraging news on the drilling front there, and of course this is 35% owned by Greatland Gold, and the remainder owned by Newcrest Mining, who entered a joint venture with Greatland once they discovered the asset. And this, of course, has over the past year seen Greatland Gold develop from a company roughly the size of where Power Metal are now into what was at one stage a £1.2 billion company, currently worth just under £1 billion. So that gives you some idea of how transformational these projects can be for companies of this size. So I say companies of this size, and of course, Greatland has a few assets in its belt. But I think you've already got a picture here. What I've described of a company with multiple assets, and the broker First Equity wrote a very detailed and a very detailed piece of analysis on the company a week or so ago, and it basically put a valuation on all these assets. It gave the shares of the company 2.4p. It's given a target price of 6.1p, but that doesn't include the completion of the Paterson Province project, which of course I explained just now. So that's not included in there. The company also noted that that with the drilling that had been undertaken at the Malopo Farmers project, the company was edging nearer to a first possible major metal discovery. So, of course, if that happens, it's going to result in a complete re-rating of Power Metal, and that's just the development of that nickel asset alone, without any of the others. Now, when a company comes to market, when a mining or mining exploration company comes to market, nowadays we're generally looking at a market cap of maybe between 12 and 15 million. So we've got 3 assets pegged for spin-off this year, and Paul Johnson, the CEO, has stated that they're doing that to strengthen the balance sheet and ensure that that these individual assets receive the proper the proper focus that they can get from a complete dedicated team running that company and project. So if you've got 15 million valuation on each of those coming to market, I'm just pulling figures out of the air here, but I'm just taking averages of what an individual project might be worth. It could be worth an awful lot more than that. Power Metal currently has a market cap of 26 million. So in no way does that reflect anything like the amount of potential in the existing assets that were in place. And that's before we get to the acquisition of the FDR Australia asset in Paterson Province. So I think currently the company is at a very exciting juncture, but also offers fantastic value for investors. And I think one of the other strengths that the company has, we've seen getting over £3 million worth of warrants exercised by investors since August last year, which of course has brought that money into the company. And what that's meant is that has meant to the company is that Paul and the team have been able to go out and spend money buying these assets from cash that they have. There's no need to raise cash. He runs a very tight ship. So there isn't the boom and bust that sometimes happens with mining stocks when they go to market and raise money to fund the purchase of an asset or fund a drilling campaign. That doesn't happen here. So it's very much if you were going to set up a fund to invest into mining exploration assets, I think. Yeah, I think you would look at Power Metal as a model of how to do that, and certainly, given the valuation of the company where it is now, I think Power Metal is going to be a multi-bagger before too long. I just can't see why the company is valued at this level when it has all these assets and the ownership of all these assets as I've described. If you go to the Power Metal's website and read the first equity note, I think it's a very detailed and good description of where the company is. And it's just a very frank assessment of the sum of the parts valuation. So we've got Malopo Farms 50.9%, Kenya Resources, which is the Ditau project, and the Kalahari Copper Belt 50%. Kasinka DRC, I've not even discussed that. That's the cobalt project in the Democratic Republic of Congo. Haneti 35%. The RRAL Australia, which is the joint venture with Red Rock, 49.9%. Schreiber Hemlo Canada assets 100%. Silver Peak going to be spun off into a separate vehicle, 30%. Alamo Gold 75%, and it's going to own 75% of the new asset in the Paterson Province. Now, that's not a company that's worth 26 million. That's a company that's worth more like 250 million in my book. But that's just my opinion with the assets and where the company is, and also the way the company is run, the way it's structured financially. I think there's going to be a spotlight shone on this company this year as these assets develop, and probably it's going to take maybe the Malopo Farms project metal becoming a fully fledged metal discovery to trigger that and make that happen.
So a potential 10 bagger there, Alan, maybe coming up. What do you think of this whole spin-off model, though? Do you think that's going to be a real catalyst for value here?
Yeah, I mean, we see it across a number of industries. I mean, pharmaceutical company Open Orphan said the other day that one of the drugs it had under development for respiratory issues was going to be spun off into a separate company. So it's a common model, and I think when you get a company that owns a series of assets such as we have here with Power Metal, sometimes you can't see the wood for the trees. There's so much stuff happening that the focus maybe on that particular project gets lost. So by spinning the asset off, and also the fact that these assets can be spun off is indicative of the sheer quality of what's there in the ground. And I think that's a factor that needs to be taken into account. But of course, in doing that, the value for that asset is realised, and that goes a long way to adding much more value to the Power Metal balance sheet. And I think as these assets spin off this year, I think you'll see we're going to leave 26 million behind.
Okay, good. Thank you. There's always lots going on in Power Metal Resources. There's always new things to discuss. Paul, very good. And I noticed as well the branding has changed. I don't know if you've noticed that, Alan, as well. It looks very smart now.
Yes, it's very much a new look for Power Metal, and I think one that's very much more in keeping with with what the group are, which is that they're a mining and exploration investment company, and that really I think reflects their status far better than the old logo. Yeah.
Okay. Well, thank you very much, Alan, there for giving us the investment case on Union Jack Oil and Power Metal Resources.
Thank you, Bob.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.